The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? Fun, volatile day in the markets. It does not get any better than this. Gotta love it. Got the big up moves, got the big down moves, and markets basically pushed right to that standard deviation level and just fell right back off the horse. And so really not a whole lot of reason for them to go up. The biggest reason just being that, the whole Greek crisis, etc., and Greece basically, begging for an extension on their debts that are due. So that really is about the only reason that there was any kind of rally that I can see out of everything else I've looked at. I mean, there's some other little stuff here and there, but as far as like the big things that actually have a major impact, that was really the one thing that I saw. And so I wanted to go over and just sort of do a quick market recap for you. And as you can see, I've been short the Russell here since about 10 a.m. Central Time, long and early in the morning, around 8 o'clock. And so it's just been going really, really good. So I had an entry right over here. Let's see here. I guess it actually be 11 Central, so 12 Eastern. And I had another short a little bit earlier. Yeah, 10:43. So right before we switched over. So anyways, but been a good morning anyways. So let's go ahead and check out the market watch. And over on the S&P, looks like we're up 1.5 off of the highs of 1424 for the day here. And looks like we got the Russell, which is up at 18.3 right now. And it literally expanded almost to the dime, right to that standard deviation level. Should have went up to 826.28, went to 826.8. I mean, so you're talking literally, a few ticks. And on the Russell 2000 before it turned right back around. And it's been going down, and I've been short on that for a while there, and I'm just riding it and enjoying it right now. Had basically an entry right here, had another add-in to the position entry here, another add-in over here, and we had another add-in right here. So I'm short again, and I'm just, trailing those stops down. And then over on the NASDAQ, it actually is really the laggard of the day. It's down at 9.25 for the day right now. With things like Apple and Facebook and everything else in the world dragging it down. Facebook isn't necessarily dragging it, it's not on it yet. But anyways, just the tech sector in general. And Apple's just getting it handed to it right now. It's just been, flying fast. So right here is just a quick recap chart. I mean, you can just see this thing just flying down, and that's just in the last, let's see here, 10 minutes. So I moved down right there, and it's still going. So we'll see how that ends up on the day. And then if we look over at, corn up 11, and soybeans up at 46. So really, those commodity prices are holding and not looking just great for the food cost out there. So expecting costs to get higher and higher. They're up an average, all food cost is up an average right now. I think they said at least 6%. And, I think we'll see a lot more than that come later in the year. As these futures prices, turn into retail prices. So get ready for that and stock up on on your food there. And over on gold, looks like it is up 19 points. So somebody knows something, I guess. And it's flying up. Of course, why would gold fly up? Well, when everybody thinks the Fed's going to print money, gold goes up, right? Because the dollar goes down. And so everybody's expecting the Fed to print money. We'll see how that works out. If they do print money, expect it to rise, and rise again. So could easily break a couple grand there if they do decide to go ahead and do a QE3. Everybody's going to be looking, of course, at what the Fed says tomorrow, and from their minutes report anyway. And then they'll be looking toward the Jackson Hole at the end of the month. And then, of course, all eyes on the Fed on the 13th of September when they do the Fed funds rate, which is conveniently the day after the Supreme Court ruling in Germany on whether or not they're basically going to allow the whole bond purchase program for the European Stability Mechanism. And if they rule against that, then say bye-bye euro. And if they say no to that, then I wouldn't be surprised. And this is a big, bold call for you. But if the ESM gets knocked down, I mean, we could see a par euro. So I don't know. I know that's a big statement, but I think in 3 to 6 months, it could be a possibility. So if there's no ESM in place, so we'll find out what happens with that. But either way, man, there's going to be some big movement. And talk about, I mean, an election year, right? You got the Greek elections messing things up. You got the Spanish elections messing things up. You got the German elections coming up next year. Of course, you got the U.S. elections. Who knows what's coming out of that? And so we'll just keep watching, and we'll trade it day by day. Watch that thing. Just keep moving. And enjoying it. Keep going. Euro dollar there. Euro dollar is up quite a bit. So it is up 135 ticks right now. So we're going to see, how well it can hold on to that before it's all over. There we go. 80 ticks. I was like, that seemed a little off. So, yeah, Euro dollar is actually up 135 ticks. So we got the pound dollar is up 80 pips there. Aussie dollar at 51. And they've been holding pretty strong. So, again, that's because of the European news of thinking that Greece is going to get a little bit longer. And they may. They're going to do whatever they can to save it. But on the political side. But then they're going to have the judiciary side they're going to have to deal with. And then they're going to have to worry about the fix-it. And that's the Finland exit. So, in a lot of ways, that may actually help Europe in the sense of they're going to be one of the biggest dissenting votes to allowing continual purchases of bonds. At the same time, if one left, then it's not so bad for others to leave. So nobody wants to be first. So that's sort of the bad side of it. And it wouldn't really affect Finland too much directly, since most of their business is Denmark, Russia, and the United States. Anyway, so you keep your eye on that. We got the Canadian, it's down 12 ticks. We got the franc down quite a bit, down 102 pips. And we got the euro yen. So it's basically the dollar gaining against the franc right now. And we got the euro yen up 1.0, so up quite a bit there. And the pound yen is up 0.67. So that's sort of our little market recap there. And and we'll check it out here and see what's going on. What else do we have? Let's pull up the news and see what's going on. Like I said, we got the Fed rate coming out tomorrow. Not the rate, but the Fed report coming out tomorrow. It's like, what? Fed rate? Anyways, and we'll come up with some cool strategies that we're going to be releasing on how to trade the Fed funds rate. And I'll be laying those out for you here in the coming weeks. And, of course, using Nadex. But we'll go ahead and check that out a little bit. But right here, we got today Lockhart speaking. He had his little thing this morning. And markets were just rallying. They were rallying really much before he had anything to say. And pretty much by the time he got done, they decided to go ahead and drop. So, and then we went over and we got a couple other things. Let's see. We had the Canadian orders. Not as big of a deal. Trade balance. Really just a quiet day in the United States as far as government news announcements. And if we go over and we check out tomorrow, we're going to have a little activity in the morning. All right. We're going to have the existing home sales. And that'll be happening at, let's see here, 10 a.m. Eastern, 9 a.m. Central. So make sure that one's on your calendar, put an alert on your phone, whatever. But you do want to know that when those reports are coming out. And that's one of the things I talk about. I was even talking to Tom yesterday about this is you have, like this, we were putting everything together, talking about a lot of stuff about trading. And one of the things was, a formula that I came up with is called basically S3. Okay? And it's strategy, system, and style. All right, and with strategy, you got to take into account, basically what is it that the mechanics of a trade. Are you buying or selling a, straddle? Are you buying or selling a call or a put? Are you buying or selling a future? Or selling a stock? Are you using a vertical? Are you doing a hedge trade? So, really, that's all that is. That's your strategy. Okay, and so that's strategy. You got to have that done. You got to understand the mechanics of how something works. That's what demo accounts are for. They're for learning strategy. And bring it over to, sort of the gambling side of things. Make it a little bit fun and interesting. If you go over and you look at gambling, like Book of Hoyle is a strategy book, okay? It's not a system book. It's a strategy book, all right? In the sense of what it's teaching you is all the rules of all the different games. And so, if you want to learn, how to play poker, you got to learn, what's a low card, what's a high card, what's a pair, right? You got to learn what's a 3 of a kind, a 4 of a kind. Not too hard, but, you got to learn it. Straight, flush, royal flush, full house, things like that. So you just got to understand how the game works. And that's the first step. But once you got strategy down, which a lot of people, they spend a lot of time figuring that out, and that's just everybody who starts on a new product, say like Nadex, first thing you got to learn is strategy. Okay, but then you got your system for the strategy. All right, I don't care if your strategy is iron condors or straddles or just buying and selling. You still have to have a system. What is a system? A system is your rules. Okay, it's when am I going to get in? When am I going to get out of a trade? All right, it's also how much am I going to risk? And when am I going to reverse? And how am I going to move my stops? And what's my stop loss? What's my take profit? It's literally it's not so much the price as it is the rules. And it's really important to have rules and to have a really solid system in place, so that way you keep yourself in check. If you don't keep yourself in check, then you're going to have a lot of issues in your trading because you're just trading on a whim. All right. And, not that systems are the, all and all, but you do need a system. So, I have a very specific system. It defines, I have a few different systems, but, one of them defines my exact entry, stop loss, take profit, trailing stop. I mean, on down the list. And it's very it's very objective, and it keeps me in check. And that would be something like, if I'm going out to have some fun, I'm playing some poker or whatever, then one of the things I'm going to do is I have a very simple system on poker. And, it's like, I'll basically, if I don't have at least a pair or, an ace with, basically a face card that has the same, suit, then, if I have to put anything in, I'm out. All right. If I have, a pair that's lower than 7, then, basically I'll do a little bit on the first round, but I have to raise after that, I'm out. All right. Just in case everybody folds. Now, if I have a 7 or higher pair, then I will raise and raise and raise to a certain point. Okay, depending upon the flop and how everything comes out, and then of course if I have like the higher the suited pair, of course the more there's just a lot of things, but I have basically about like 12 rules that I use, and they're all actually statistically based, and I'm just playing stats. All right, so stats are good, but what really annoys me, right? I'm sitting there and there's this guy sitting next to me. And it's like he doesn't have a clue what's going on. The guy's betting on nothing, all right? And, but then all of a sudden he bets and he actually has something. So you're trying to nail the guy, but then all of a sudden he actually has something that time. And that's the style. It's learning how to read people, okay? And a lot of guys, they want to find that magical system. And you have to have – and so when they don't find the magical system, they write systems off altogether, all right? And they think it's all style. Well, that's not true. It's a system, but it's combined with style. That's reading the other players. So, again, with the poker example, I'm looking for the Bigfoot guy, the guy who's going in and he's just stomping around. He's raising on everything. I'm looking for the mouse who won't raise until she has, like, the royal flush, all right? And then I'm watching out for the jackal because he's pretty good, but he's a little bit sporadic. And then you got the lion who's very detailed and goes in for it. So we'll talk a little bit more about style when we get back and how to combine the S3 formula together to get your trade signal. Stay right there, folks. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And I'm just checking out some things in the market, looking at what's going on. And we had the market pull back quite a bit. So we're going to see if it keeps going or if it's going to, chill out now. And basically it has pulled back that deviation level. And I'm looking over at Russell. What we'll do is I'll go in. Let me pull up the Russell real quick here on another formula and get some things going for you. And just to let y'all know, we have quite a few cool things coming out, and I cannot wait to get them out to you. But one of them is going to include the ability to do the standard deviation stuff here and make it really easy, really quick. So like, where did that 11.2 number come from? And because there's a lot of different standard deviation formulas, and we want to make sure you're using the right one, so we want to tie everything in. We're going to tie in live implied volatility. There's going to be a lot of stuff we're going to be tying into it. And so it looks like we have a deviation back on there to 815.08. But yeah, we are going to be launching that out. There's going to be a new diagnostic section to TFNN to go along with the Diagnostic Trading Hour. And as soon as we have that ready, then I, of course, will be letting you know, and I'll be showing it to you and how it works and everything else. And it's all going to be about trading tools. It's going to be about system. It's going to be about style. And, yeah, it looks like we got about 70-80% on that standard deviation move. So definitely would be looking to possibly tighten stops very soon here. And right now we had a pretty strong up move right there. And inside here you can see a very high ask side, so on the push up. But then it calmed down. So let's see what happens, and we'll keep monitoring. But if it does pull back, then we could have one more entry. Looks like we might have it soon. But I'd be definitely looking to tighten my stop. I'd probably put a stop right now at around, if I'm short, so if you short Russell, depending upon where you're short, of course, but be looking at around 18.2.3. Anyway, so yeah, definitely want to tighten that up. And that's sort of across the board on the S&P and everything else. And let's see here. I'll pull up S&P charts for you. One of the things I was talking about right before the commercial break was style, and that's wanting to read the market participants, okay? And, you have this system, and this is the reason systems never work, all right, is because they don't factor in style. And if you don't factor in style, then you're going to, it's going to break. And one of the things I liken it to is, let's say your system is you go into the doctor to make sure you're healthy, okay? And you want to have a healthy, good life. So you go in and you get your checkups and everything else. And on those checkups, what happens is, he does all these different tests. And he's like, hey, you know what? Clean bill of health. You're doing great. Keep up the great work. Your diet's right. Your arteries are clean, et cetera, et cetera, et cetera. But then what happens after that? Well, you go out and you had to park across the street because the parking lot was full because, the whatever. And you don't look both ways. And all of a sudden this bus knocks you up and you're gone. You're dead. Okay? And he gave you this clean bill of great health for long life, healthy, etc. But you didn't look both ways before you crossed the street. All right? So what you want to do is make sure that you look both ways before you cross the street. All right? And I liken that to whenever there's a big news announcement coming out, then I'm going to look both ways. I'm going to be very careful, all right? Hit a standard deviation level. I'm going to be tightening up my stops, all right? If my trend line is pointing down, but my system is saying buy, I'm probably not going to take it, okay? Sort of a don't fight the trend. If I know news is coming out in 30 minutes, like the Fed funds rate, well, I'm probably going to, whatever I'm doing, I better expect it to be pretty flat for the next 25 minutes, and then I probably better be out or have a very, very tight stop. So you want to have that style. You want to know how to read volume and price action. You're going to have to look at support and resistance levels, gap fills. You're going to take into account highs and lows of yesterday, close of yesterday, high and low of overnight, things like that. And that's the work that everybody's trying to avoid. But as a trader, it's a profession. It's a business. And so you got to get in there and you got to do a little bit of work. Now, here's the thing. A lot of people just want to read everybody. Okay? And that's sort of like sitting down at cards and thinking you're good at reading everybody. And all of a sudden, let's say you clean house one day and all of a sudden you think you're a big shot and you go and you put a bunch of money down and you go to Vegas and all of a sudden you get wiped out. And you're like, what happened? Well, one, Vegas is a whole different level. But two is reading people. Reading the market, that's not a substitute for standards, statistics, rules, things like that. And so you have to have your rules. You have to have your risk management. If you read everybody and you think you have a high card and everybody else has nothing, and you put it all in, well, you're probably going to get, that may work for you a couple times, just basically out of almost a bluff, okay? But is it going to work for you for a long time? Probably not. All right? And so, you got to have style, but you can't lose the system. You got to combine both together. So with your strategy and understanding what it is you're actually trading. Stay right there, folks, and we'll have more for you. We get right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour here with Darrell Martin. And the market is continuing its slide on back. And looks like we are actually pushing now on the NASDAQ. We are in negative territory. Of course, we've been on that one. The Dow is in negative territory. And the S&P is just a couple ticks away from negative territory. So we'll see if it keeps going. But basically, it could end up just flat. So we'll see how it ends up. But it's like every other day, except for today, at least we got some movement. So there were some opportunities there to make some money. And then on the Russell, it is just up $1.40, $1.50 right now. And we'll see if it continues its slide on down. And looking over at corn and soybeans, like I said, they've been moving up, and it's just a sort of a continual thing. And as far as Apple, let me see here. I got a question over at Tiger's Den, checking out some Apple. So let's just take a bite out of that, see how that's looking right there. And it is definitely getting a bite taken out of it today. And we actually, let's see, we just broke through here. And it just seems to be going with the market. I mean, it shot up and then just gave it all back up right with the market. I'd have to back up. I'll load a chart over here in a minute here and get some Apple information going for you. And but yeah, I mean, right now it is definitely moving down, just in tightening stops. Short right now, let's see, stop at a little above, basically 655. So with the stop right there. And I got some people over here in the Tigers Den, so they got that nice spike in the market, so that is awesome. And just keep things going right there. And so let's go ahead and check out again. We were talking a little bit about news earlier. We didn't get a whole lot into it. We just sort of got up to Wednesday. But I do want to remind you that we do have the FOMC meeting minutes coming out 2 o'clock tomorrow. Again, that's going to be 2 o'clock Eastern time. And you want to have that again. You want to have that alert. You want to know that's coming. We'll be telling you right here. That's one of the great things about being on TFNN is we're watching the news and we're keeping you up to date. But definitely just have that alert right there. And I'll remind you tomorrow right before the show. But that's going to be coming out. And you want to, it can get pretty volatile right now since, even though it's just the minutes and it's not the Fed funds rate, people are going to be looking for several things. And they're going to be looking for, okay, are there any clues such as, hey, you know what, inflation's low? Well, if inflation's low, they're mandated to keep inflation lower in check so they can print more money, all right? Is unemployment high? Well, really, it actually has ticked up. 48 states actually had a higher unemployment rate in the past month than they had previously. So that's actually really bad. So that could be like, hey, that's our mandate. We have to do it. So they need an excuse. At the same time, Bernanke doesn't want to be the one man that caused hyperinflation. He wants to be the man that saved the U.S. from the Great Recession until, he's replaced by somebody else. So, he's sort of in a conundrum. He's been kicking the ball to Congress and saying, hey, y'all get your stuff together. Y'all fix this. Y'all make this happen. I've done what I can do, and I can step in if I have to. But, if the market isn't falling, he's going to have a hard time really getting a lot of support behind that. So, even though he has some other stuff, but, again, I think that's why they're waiting till Thursday, because they want to make sure, Thursday on the 13th of September, because what they want to do is, they just want to make sure that, the market's falling before they put it through. So if the market's falling like crazy, then I think that he'll step in without hesitation to do whatever he can. But, usually a lot of times we have that report on Wednesday. So, I find that really interesting that how that's been all played out, whenever they manipulate their own government policies and reports. But I want to go over here, and we had a request. So let me check out. Now, if we're looking on a short-term basis, I mean, I'm just riding it literally every little bump down. I'd be riding down Apple over there. And if I'm looking at a longer-term basis, let me open up a new chart and get it going for us. And on this new chart, I'll pull up some information, and we'll get Apple. Let me pull up just daily bars and get that going. And so we got day. We'll pull back the last, last 2 years in there. Fill it out. And then I'm just going to go ahead and do the... There we go. All right. Yeah, you can definitely see a spike up and then drop down. I mean, I wouldn't be taking a position short, meaning a long-term position yet. This market sell-off, of course, would make me nervous, but I think Apple's flowing with the market. So, right now, I mean, as far as I gave a couple weeks ago, we were talking, we had a caller come in, and I said, basically, here's the buy signal right here. We had another entry, let's see, on the 16th. And then, right now we basically have our stop at break even. If we were really tightening it up, then, maybe 1 or 2 bars back at most, basically be the low. So, right here, I think you'd easily be just knocked out and give up a lot of gain. But if you're short, how far down do you think it could go? And I don't know, let's pull up some, check this out. I'm just trying to find a good point. I think the best thing would be to go in and just throw some fibs, right? See if the fibs are fibbing or not. And so we're going to throw that on there. We'll put some Fibonacci retracements. And there we go. All right. So right now, I think we could easily have a pullback, 23.6. And I mean, just look at that level automatically on the fib. That was a spike that dropped right there. It also was a pretty heavy resistance point on this side, so it could easily be a support line. There's really nothing in between here to serve as a major support line because, of course, Apple's making new highs. It actually became the most valuable company in the day yesterday and then early today. It actually became the most valuable company in the world ever. So on a market capitalization rate, it beat Exxon. It even beat Microsoft. Now, technically, it didn't beat Microsoft's old record back from the 90s because you have to factor in inflation. So it has to get to, I want to say, 858 billion or something like that. To actually beat Microsoft based on inflation. But as far as just numerically not factoring in inflation, it has actually surpassed it. And I think that was sort of a good and a bad thing for it, because a lot of buyers came in, a lot of sellers are there, boom, it hit, great news comes out. So buy on the rumor, selling the news, wow, it's the most valuable company, let's sell it. So, and I think that's pretty much what happened. Of course, it didn't join the rest of the market. And again, right here at 638.14, looks like a realistic potential level right there for it to drop down to at least at that level. So I'd be looking to probably take some partial profits at that point if I was holding a big short position. And then after that, you got to drop down here to 615.83, and that's actually where one of our major, stop levels is. So right there at 615.83, but that's a pretty big move right there. There'd have to be some bad news going in the market to pull it all the way back down to this level. And a 50% retracement. Now that, understand now, on diagnostic trading, we're looking at a lot of things, and technically we're looking at how other traders look at the market to see where they would place their orders, okay? Because the market exists for one reason only, and that is to fill orders. It exists for no other reason, okay? And if you think about that, what does a stock market exist for? It exists for a place for people to come together and exchange, basically shares for money, okay? What does a commodities exchange exist for? So that the original reason, and it's still a major contributing factor, is so that way a farmer can get rid of their corn and somebody who makes a lot of cereal can buy the corn. And they can lock in their prices so the farmer can, okay, here's how much money I've made, there's my profit margin, my spread, whatever. And then on the other side, you have the guy who needs the corn, and he also has to fill a whole bunch of orders for cereal to all these grocery stores. So he wants to lock in his rate so his rate doesn't go way up whenever he signs all these contracts and everything else. So same thing, like McDonald's with beef, right? And so you got milk companies out there. So you got milk futures, and you got sausage companies, buying pork, and you got airline companies buying oil. So basically using it to hedge their cost on their business and have stability in their business. So it exists at the end of the day to fill orders. So it's going to go to where the orders are. If there's no orders there, the market really can't exist. Like, it's not going to just hey, we're going to have one order hanging out of here because one guy wants to buy at this price, we're going to stay here. It's like, well, nobody wants to sell at that price. Well, it's not going to stay there. It's going to go, well, where do people want to sell? Well, they want to sell, down here. And a lot of people down here want to buy down here, so it's going to move to where the orders are because it wants to fill the orders. That's the way an exchange makes money. It makes money by orders being filled. And if you think about, and then a market maker makes money, the one who's driving, the exchange doesn't drive the market, but that's why it exists, is to make money on orders being filled. A market maker makes money, a market mover makes money, really a market maker makes money simply by the transactional difference between a buyer and a seller. So they're trying to make that market exist. And that's just like a grocery store. If you go to buy bread, then, the, mom and pop grocery store or, Walmart or whoever you want to say, they can't make any money unless you actually buy the bread, right? So if all this bread's coming in and nobody's buying it because it's too high, because nobody's willing to pay that price for them to sell it, then they have to have it at a lower price. So they're going to have, or else you're going to go somewhere else. And if you go in there and you're not willing to pay the price, you're just not going to buy. You're going to go to some other store, some other place. Or you're just going to wait, or you're going to make your own bread, or whatever you're going to do. So they have to have the prices set at a point where they can be filled, so buyers and sellers come together. And then, of course, now the bread company gets mad because nobody's buying the bread, so they have to lower their price, or else they're going to have a lot of bad bread on the shelf that they have to take back because people aren't buying their bread. So all that to be said, markets go to where orders are. If markets go to where orders are, how do you know where orders are? It's simple and complicated at the same time, but the simplicity of it is, how do other people look at the market? Okay, so one of the examples I have right here is I have Fibonacci retracements up here. Okay, a lot of people use Fib retracements from highs to lows, and that's how they base where their orders are, where they're going to put, here's where I'll buy at this level. Just like I said, how do you think that Apple's going to go? Well, I think it'll go, solidly, it could easily go back to 638.14. Okay, so if it's going to do that, guess what? A lot of people are going to be having orders to buy there. So there's going to be buyers willing to come in and buy at that price. There's going to be sellers wanting to take profits at that price. Okay? So, and then there'll be some people saying, hey, if it breaks below this level, then I think it's going down to 615.83, so I'm going to sell right there. So you're going to have buyers and you're going to have sellers coming together at those prices. And when you can have what's called confluence, where you tie multiple indicators together, then that's even more powerful, such as the 50% retracement level. That's used for GAN traders. That's also known as the golden ratio for golden ratio traders. It's used for Fibonacci traders, okay? And just for people who don't know what any of those are, but just understand the idea of 50% retracement, okay? So you put those 4 things together, now you got 4 types of traders looking at that price level. So that's going to make this a very solid level right here at 597.80. If that high stays where it's at, that's going to be a very hard level to break, but it also can sit there and literally just stay there for a while. And that's when you get areas like this, okay? And let me show you this here. We'll see if it works out or not. But I'm going to try it out. And we'll just try this on a live, no pretest done. And just check it. So, okay, so like right here we have a 50% level. All right, so high to low, bouncing back. And look what happens. It literally just keeps coming right back. Why? Because there is a lot of orders right at this level. Okay? So that gives us a lot of strength. And then you can even combine the fibs right here. So there's strength right there. There's 2 different fib levels. So that's really a high, so it's not so much a retracement. But it was a fib level. And then you take it down here to the next level. And notice that 61.8% retracement level, the exact same as the 50% retracement level. So that's confluence. That's 2 things coming together, which means even more traders placing orders. And then you tie in things like 200-day moving averages. So that's the strongest moving average that exists in the market. And you can add in things like 50-day moving averages. That's a very popular one. I use that one a lot. And, whatever platform you're using, just hop over and choose you can use simple or exponential. So there are slight differences between them. But, I'm usually using simple moving average. And, whichever one you use, they're going to be different, but they're not going to be like night and day unless you're using it for an actual trading signal. I'm looking at it just to see where would people be placing their orders. And so if I put that on there, let me make it a little more visible for you. And, all right, we got it there. And let's just change the color. We do have there. Okay, yeah, they're just so right here, check this out. We have the 50-day moving average at the same level here that we have 50% and then we have 61%. So now we have 3 things going the way of, confluence on technical analysis. So that's one piece. And we look at that and we go, okay, well, this is where orders are going to be. They're going to be stacked here. They're going to be stacked right here. They're going to be stacked right here. And, where's the strongest area going to be? It's going to be where several things come together. So like the 61% last Fibonacci retracement, this 50% Fibonacci retracement. And then we also have right here, we have this, 50-day moving average. So, all that combined, that means that there's a lot of orders there. The market would love to go there because it can make a lot of money there. And notice, just look right here. See how all these orders are right here, and it'll drop down and came back, and it still hung out there for over a week again, just filling all the orders. So, and so when you do that, when you figure out where those orders are located, it helps you place your plan, because what you don't want to do, here's what you don't want to do. You don't want to be the guy that says, I'm going to start where all the orders are. Okay? That's the consumer. You don't want to be the consumer. All right? You want to be the supplier. So if that's where I think it's going, that's where I want to be filling their orders and getting out. Because at the end of the day, when it gets right down here to 50, it's going to be a 50-50 chance. Okay? Literally, there's just no prediction on what's going to happen right here. Really, the prediction is it's going to oscillate. And that's when you get in and it barely moves and you're like, what's going on, man? I thought the thing was flying. Well, it was. And then it got to the area where all the orders were. Now they're going to hang out there and fill as many orders as they can. So that's one piece, the technical analysis, tying that together, find out where the orders are, make your game plan to get to that point, and what you're going to do when you get there, like in the sense of getting out or taking profit when you get there. And that's the same thing with standard deviation. I'll wrap that up with a little bit more about looking at where the orders are right after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome here to the last segment of the Diagnostic Trading Hour. And I did want to go ahead and give an answer on that expected move down. A 2 standard deviation move down. We've already passed a 1 standard deviation. If it goes ahead and moves down 2 standard deviations from the high of today on Apple, we'd be looking for basically a target of 647.82. So the closer and closer it gets to that, just tighten your stops. But obviously, be tightening them already. It's a nice big move down. But definitely be tightening your stops on the way down there. But that's about how well we should expect today, just based on the implied volatility. And we're only a few points away from that. So, definitely could easily happen. And with all the markets dragging everything else down with them. And then to wrap up on the style, remember I talked about technical analysis, where the order's located, okay? Then I was talking about standard deviation, right, where the order's located, like at 647.82, okay? So that'd be a standard deviation level where orders would be located to buy, which would push the market back up. So they may be a little bit higher. They would be like 648, 648.5. But, within about 50 cents or so of that range. And that's where a lot of orders should be located just because that's just how the market works, okay? People can only sell so much. You can only buy so much. And that's really the option pricing is building in that implied volatility of how much are people buying puts and calls and everything else. So, but we did just pass the 1 standard deviation level on Apple, and so it may be tightening up again pretty soon here. So I'd definitely be looking to tighten my stops right now if I'm in the Apple, if I'm short Apple shares at the moment. And we can even see if it zoom in there a little bit, it is sort of hesitating. See, it's starting to chill out. So I'd be tightening right now to about 653, maybe 15, 653.20 on the short side. And then the other piece that you're looking at is the fundamentals. So just what are fundamental traders doing? Like they're buying because they think the QE3 is coming in, that type of stuff. Like that's what's happened. They think the grease is going to bail everybody out. That fundamental news. And then you're now so you have your standard deviation, your statistics, you have your fundamental, you have your technical, and then you have just your seasonal cycle. Right now we really don't have any seasonal cycle going on. So as far as the major, there are other cycles, but as far as the major cycles, so that's not going to be as big of a factor right now. So you use those things, and one of the questions asked is there a group that collectively gets together and plans ahead of time? I wouldn't somewhat say there is a group. I mean, I know the floor traders do talk, and they are basically wolves, and they find who out the the lead of the pack is, and they usually follow that person until they consume them. But so I mean that's happening, but I mean that's just a small portion now. You got so many shares being traded now online and globally. But yeah, I mean they're going in and they basically are doing where are the orders located. And if I'm going to sell a million shares, I got to figure out how to get out of a million shares. So I have to know where the orders are located. So that's where they're going to put things together, like what I'm talking about, looking at what do traders look at for their sell, for their buy. And that's sort of the reason you feel the pain of the stop loss issue of why is it every time I put an order and I put a stop loss, I get stopped out. Well, because they're like, where would people place their stops? Okay, so so if they're selling and you're buying and they're like, where would you place your stop to sell? Because they have to buy back. Then that's where they're going to drive the market to that point. Now, that's just one of many factors. They're not really trying to stop you out. They're just trying to fill your order. If you didn't want the order filled in the first place, shouldn't have put it there. That's basically the mindset. So it's not so much anybody plotting against you. It's that all these things are working together, okay? So they're working together in the sense of they are coming together to help understand where the orders are. And the more you understand this diagnostic concept of where the orders are located, the better you'll be at calling, I don't want to say tops and bottoms, but I mean basically extreme, levels like, bands in the trading. So the standard deviation levels. So that helps with reversals and taking profits. But the biggest thing is you want to stop being the consumer. You want to start being the supplier. Where are the orders located, and how can I help fill those orders versus how can I be the guy that gets filled? And we know how that goes, right? So hopefully y'all picked up a few tips today, and feel free to call in tomorrow. Ask any questions you want about this. We'll keep going. And but go ahead and let me do a wrap-up on the trading day here so far. We got the S&P actually in negative territory now. The Russell's just 50 cents from negative territory. Got the NASDAQ and the Dow both down 12 points. We got we got the oil up 86. We got gold up 19. We got corn up 15. Soybeans flying up 46 points. And most of the USD-based pairs are positive right now. Y'all have a great day. We'll see you tomorrow.